Litigation Finance, the complete guide you need to know in 2025. Hello! Would you like 36% yearly return from litigation financing? What if I told you there's a low-risk, high-reward strategy to profit from the legal system, even if you're not a lawyer? What if I told you there's a way to make your money work for you but also fight injustice? I'm the living proof of the strategy. This is how I achieved financial freedom and retired on passive income in my 30s. It's called litigation financing. So what exactly is litigation finance? It's a third party like you and me who's not a lawyer or involved in the legal dispute, providing capital to help pay for lawsuit or claim in exchange for profit. That profit can be interest payment or a share of the settlement and judgment in the end. For example, do you ever see those no-win, no-fee advertisements from different law firms on personal injury case, such as car accidents? I actually have been lending to such lawyers for almost 10 years. As a third party, I provide capital to the lawyers so they can take on cases while their clients don't have to pay. When the case concludes, I've already earned my interest without lifting a finger, and the client got justice and a compensation from insurance for his or her injuries without having to pay any legal fees up front, and the lawyer got his share of pay from the settlement as well. You see, it's a win-win-win situation, and the third party like you and me have made this happen by being the funder for the lawyers. This is exactly how I've generated consistent passive income and retired in my 30s. Here's what makes this industry fascinating. In 2024, the global litigation finance market was valued at over $15 billion and is projected to grow at about 12% annually. But here's the kicker. Most of this growth is happening because traditional legal funding models are broken. Another example of this is patent litigation. Imagine a small company has patents which are infringed upon by big corporations, and the damages are, let's say, well worth, over $50 million. But the plaintiff does not have the upfront, let's say, $2 to $3 million or so to get through the entire legal process. Again, a litigation finance funder can come in and provide capital in exchange for a share of the profit in the end when the case settles or wins a judgment. Now, at this point, you're probably wondering, if it is so good, how come I have never heard of litigation financing? I'm telling you, you're not alone. To be honest, 9 out of 10 people I talk to have never heard of litigation finance. And the remaining person who has heard of it is because he's a lawyer or her's a lawyer. She's a lawyer themselves, which is why they know. So why is that? Why don't the average person like you and me hear about it? This is because existing funders are all institutional. Today, how it works is like this. For process-driven cases, such as personal injury claims, the bank gives a huge revolving line of credit to the law firms, and the law firms fund their lawyers with this line of credit in exchange for profit split in the end when every case concludes. So, lawyers tend to stick with the law firms for funding, so they just need to work on cases instead of worrying about financing, so they can take on all the cases that come their way that fit their criteria. Like, where do everyday investors like you and me come in this picture? Nowhere. There's no opportunity for you and me in this traditional model, so no wonder you've never heard of litigation finance. For more complicated cases such as commercial litigation or intellectual property disputes, the cases usually originate at big law firms anyways. The plaintiff is usually a decent-sized corporation themselves, so they can afford the upfront legal fees. And after knowing the details of the case, the law firm feels the odds of winning are very high and the potential judgment will be well over $100 million. So then they take the case to a litigation funding firm who funds deals for about $50 million and upwards. So the plaintiff does not have to spend more money in the lawsuit, whereas the litigation finance fund will provide a capital in exchange for a portion of the winnings. Again, in this model, where do everyday investors like you and me come in the picture? Again, nowhere. Also, this lists small players whose intellectual properties are infringed but do not have money to engage law firm to begin with, stuck. They're not even picked up by litigation funders because their cases are way too small. So you see, litigation financing is a very profitable endeavor that's been the best kept secret among the big law firms, banks, and institutional legal funds. That's also why data on litigation finance is very limited, while the big boys have been enjoying great returns. From what I can gather, the yearly returns on litigation funding are about 36%, while the settlement rate of all cases in the US is about 95%, meaning the vast majority of litigation finance cases settle instead of going to trial anyways. So how did I know about litigation finance? I stumbled upon it because I was a victim in a car accident in my early 20s, and it was a serious car accident. And with legal representation, the payout was more from the auto insurance company, but the payout timeline was longer. I did settle and get paid in the end. From that experience, I truly learned firsthand that personal injury law representing plaintiffs with indisputable injuries are low risk, high reward. It's so low risk that in fact, there's something called ATE, which stands for After the Event Insurance, which is a third-party legal insurer, willing to guarantee personal injury claims for high-volume law firms. Even insurance companies are willing to insure these cases. Think about it. That should tell you something about the risk profile of this asset class. So eventually, I started funding my lawyer and his team as they became a top personal injury legal team, handling close to 1,000 cases at any given time. And instead of a profit split, I arranged a high interest payment structure, annualized 10% plus, paid up front. It's highly liquid, and I can exit every 6 months, so the lawyers get to keep all of their profit. I earn high interest income passively and consistently, and justice is served. This is how I retired in my 30s. Many who have heard of it through my website and newsletters also started trying it, with some eventually quitting their jobs. How do I know? Because they told me after. I'm very happy for them. And in fact, we're the only non-institutional people I know who do litigation financing in certain areas, and we even coined the term legal lending for personal injury lawyers. This also led me to explore equity-style litigation finance, such as patent litigation, though I dislike the traditional model where returns depend on binary case outcomes. So I structure it differently. We target settlements instead of trials, which make up 95% of the market anyways. That means the returns come from smaller settlements across about 30 plus claims in every batch, and the money comes back every 12 to 18 months, and the trial risks are minimized. At the same time, the cost of upfront legal service is also 50% cheaper in this model, and now even small investors and IP owners can afford to pursue claims against large corporations. This way, on contract is 30% annualized with diversification, high liquidity, and no dependency on winning a lawsuit. There you have it. Now you know what litigation finance is, a secret weapon that 99% of people haven't even heard of. Let's recap. The litigation finance market is growing rapidly, now at about 17 billion, expect to reach about 67 billion by 2037, with an annual compound return of about 11%. It's dominated today by institutional players like Goldman Sachs, JP Morgan, and big finance legal funds. Traditional models offer 36% returns, but you have to lock your money in up to 7 to 10 years. And our improved model is targeting settlements instead of trials, and it has a highly diversified pool, and the money cycles every 12 to 18 months, and it's uncorrelated with capital market or interest rate, and there's no dependency on winning a trial. So I feel this is a win-win-win model for investors, lawyers, and plaintiffs. And many families are now living on passive income from this alternative investment strategy. Want to get started? Want to learn more? The best way is to PM me your email address so you can receive full guide, or go to my website at misspassiveincome.com, which is mspassiveincome.com, and subscribe to my passive income newsletter. Thank you for watching, and I'll see you in the next one.